Hello and good morning, everyone. Another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that are expected to be moving various asset prices, with a key focus on the ECB interest rate decision. So as you join, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So a big shout out to Sir Brian Mutai for being the first person to join and comment. Thank you for joining, and hello, good morning. And see Paul Kerry in the house, Marcelina, Dennis, Kids, as well as Bruno Hillary. Thank you guys for joining. So I do appreciate having you guys in the space. So let's get on with the economic calendar. But before we do that, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence and, of course, practice proper risk management. So first things first, on the economic calendar, we don't have much happening today. So the key highlight of the day, today being Thursday, the 8th of May, is that we'll be focused on an interest rate decision by the European Central Bank. So I'm just trying to my chart again. So the European Central Bank is expected to make an interest rate decision, and this will be at 3:15 p.m. And in this case, we are expecting a 25 basis point rate cut from the prior 2.65% down to 2.40%. So if you look at this particular section here, and it basically shows you the major central bank rates. The highest as of this moment is the UK with 4.5%, closely followed by the US, which has a range of between 4.25% and 4.50%. Then we have Australia with 4.1%, New Zealand 3.5%, Canadian dollar 2.75%, and then the Eurozone 2.65%. So while Japan is on a path to increasing interest rates, all the other central banks have been on cutting interest rates, with the lowest being the Swiss franc, which is at 0.25%. So we'll be expecting a further rate cut by the European Central Bank to 2.40%, which would make it among the countries or regions with the lowest interest rates. And that basically defines what we call a carry trade. So a carry trade is a trade where you're able to borrow from an environment with a low interest rate and then invest in an environment with high interest rate. So this means that if rates go down to 2.40% in the Eurozone, investors will be able to buy at a similar rate and then invest in an environment where the returns are much higher. For instance, you can go to the US and invest and get 4.5%. So this creates what we call a carry trade out of the divergence in the central bank rates. And as a result, we get to see more capital flowing out of the Eurozone and into other jurisdictions with higher interest rates, especially the UK, where we are seeing 4.5%. So overall, once this decision happens this afternoon, we'll be expecting to see more weakness in the euro, and this will be happening at 3:15 p.m. So later on at 3:45 p.m., we'll have the ECB press conference where the ECB chair, Christine Lagarde, will be presenting the monetary policy statement for the Eurozone, and of course discuss a couple of things about the European economy before responding to journalist questions that will mostly help drive the conversation forward in trying to understand whether the ECB will be cutting rates further or whether it will be holding at that level. So outside of that, this morning we had a couple of good news. On one side, we had consumer inflation basically increasing by 0.9% quarter-over-quarter in New Zealand. And this was a big increase from the previous reading of 0.5%, but also a miss of the 0.8% target. So then we had the labor market information from Australia. So in this case, we're looking at the employment change, and the number of new jobs created in the prior month, that is March, was 32.2 thousand jobs, which was slightly lower than the 39.8K expected, but also a big U-turn from the big drop that we saw in the prior month, where we had a negative 57.5K reading. So clearly, in this case, we are looking at a period of time where there is a period when number of jobs were lost in Australia. That is in February, about 57.5K, which was revised lower from the previous reading of 52.8K. And now we are jumping right into the positive side of jobs. So in this case, that 2.2K jobs created in the month of March was a big surprise to the upside compared to the previous reading. So the unemployment rate increased from 4.0% up to 4.1%. And this missed the expectations of a 4.2% drop. So in this case, we can generally say that the rate of unemployment has remained steady at 4.1% as per the previous reading, though the revisions had dropped to 4.0%. So outside of that, on the US side, during the New York session, we will be mainly focused on a couple of statistics. One of them will be the unemployment claims, which are expected at 225K. Philadelphia Fed Manufacturing Index, which is expected to slow down to 2.2. And then building permits, which are expected to slow down to 1.45 million. And also the housing starts, which are also expected to slow down to 1.42 M. So all expectations on the US economy are expected to be weakening. From one side, number of people claiming for unemployment insurance is expected to increase, meaning that the job market sector is expected to be weakening. Manufacturing in Philadelphia is expected to really slow down from a 12.5 reading in the prior month to 2.2. Then the number of people applying for building permits is expected to slow down to 1.45 million, down from 1.46 million in the prior month. And of course, the number of new houses that have begun construction is expected to reduce to 1.42 M, down from 1.50. So if you happen to see this kind of weakness in the US economy, this is likely to boost the dollar, because a weak economy means that the Fed has to act and increase interest rates or hold them higher to support the economy. I believe the opposite is true. Like a really weak US economy, especially bordering an area of recession, would force the Fed to cut rates. So clearly, a weakness in the economy would be a weakness in the dollar. And of course, if it's a strong economy, then it would be positive for the dollar. So outside of that, we'll be going into the Easter holidays, beginning with Good Friday tomorrow. So from this midnight today, we'll be getting a bank holiday from New Zealand, and then more bank holidays from Australia, as well as the Eurozone, the UK, Germany, Italy, Canada. All these countries will be having a national holiday. So personally, we'll be taking a break. So we'll be meeting back on Tuesday next week. So clearly, this might be one big move that happens today that creates some good volatility, and then volatility dies out on Friday, and then people go on a break. We come back here on Tuesday next week. So outside of that, we have a couple of more developments happening in the markets. So I'm trying to find some of them. So one, we're expecting Netflix earnings later today. Wall Street high on stock as defensive choice, while big tech reels from Trump's tariffs. So Netflix has largely been associated with being safe from Trump's tariffs. So Netflix is set to report its first quarter earnings after the bell on Thursday, with the company sitting as one of the best positioned big tech names amid an uncertain economic environment dominated by President Trump's trade war. So amid recent market volatility, Netflix's strong subscription model with critical entertainment, which historically has performed well in a recession, has made the stock a defensive choice for investors, Bank of America analyst Descarif wrote on Tuesday. Netflix stock is up 9% this year, a standout when measured against year-to-date declines of 17% or more for its larger tech peers, which includes Apple, Amazon, Alphabet, or Google. The SP 500 is off about 9% this year. So when you look at the big stocks in the US, especially the FANG index, the Facebook, Apple, Amazon, Netflix, and Google, it's only Netflix that has outperformed. Most of these other stocks have been on the losing side, especially when you include Tesla in that mix. So for today's earnings, that is after the close of the bell, we're expecting a revenue of 10.5 billion, that was made in the first quarter of this year versus the 9.37 billion compared to the prior quarter in the previous year. And of course, the guidance from the company itself is 10.42 billion. So earnings per share are expected at $5.68 versus $5.28. This will be quite an increase. And of course, the guidance from the company is at $5.58 per share. So clearly, we'll be expecting some outperformance. And of course, this is expected to increase volatility in the Nasdaq index. And this will be after market close. So that should be past 11 p.m. So on the other hand, we have some new developments in Japan. So Japan reports $63 billion trade surplus with the US as it talks with Trump on tariffs. So Japan recorded a trade deficit in its March-April fiscal year, but racked up a surplus with the US, the finance ministry reported on Thursday. So Japan's global trade deficit totaled 5.2 trillion yen, or $37 billion, for the fiscal year through March, for the fourth straight year of deficits, according to the provisional statistics. However, the surplus with the US, so on a global scale, all business that Japan did was a net positive, not net negative of that 7 billion. But when you do a country-to-country basis, so between Japan and the US, Japan had an excess of 63 billion, meaning that Japan exported $63 billion worth of more goods than it imported from the US, clearly defining that the US is a very big and important partner in Japan's trade. So in this case, it doesn't improve their negotiation tactics between the US. So exports to the US are a contentious issue for US President Donald Trump, and Japanese negotiators are in Washington to argue their case against higher US tariffs. So Japan is a key long-time US ally and, of course, major investor in the US, employing hundreds of thousands of Americans. Of course, we also need to remember that Japan is the biggest holder of US treasuries, which is then followed by China. So in this case, while Japan is negotiating for easier trade tariffs, on one side, we know that it has a much bigger advantage with a net trade balance of $63 billion. And at the same time, we know that Japan is also the biggest investor in US treasuries. So their sell-off last week kind of pushed Trump to a dark corner. He had to negotiate and, of course, freeze the tariffs that he had implemented on the rest of the world. So with the Japanese negotiators currently in Washington, we'll be expecting updates, and these could be a key driver in the markets. So on the other hand, we have more developments on oil. Oil set for weekly rise on new Iran sanctions and OPEC cuts. So oil prices extended gains on Thursday on the prospect of tighter supply after Washington imposed further sanctions to curb Iranian oil trade, and as some OPEC producers pledged more output cuts to compensate for pumping above agreed quotas. So Brent crude futures rose 56 cents or 0.85% to $66.41 a barrel by 6:25 a.m. GMT, and the West Texas Intermediate, or what we call WTI or US oil, it was up to $63.12 a barrel, which was an increase of 1.04%. So both benchmarks settled 2% higher on Wednesday as their highest level since April 3, and are on track for their first weekly rise in 3. Thursday is the last settlement day of the week ahead of the Good Friday and Easter holidays. So I think the rally has a couple of factors behind it: a short covering, the weaker USD, which makes crude oil cheaper to buy, and the US pressure on Iran, IG market analyst Tony Sycamore said. So WTI could rise to $65 to $67 a barrel, but may struggle with further gains, he said. So on other news, I would be trying to find what's the next update. So on the morning bid from Reuters, no surprise at Japan talks except Trump. So I look at the day ahead in European and global markets from Rocky Swift. US President Donald Trump unexpectedly get crashed tariff talks with Japan, and markets breathed a sigh of relief that it wasn't a disaster. So Japan was the first major trading partner to negotiate directly with the United States, a A test case for reported 70 plus nations seeking better terms on sweeping tariffs, Trump announced and then abruptly tabled this month. So Trump declared big progress in the talks he joined with lead Japanese negotiator Resei Akazawa, who gave few details in his own readout to reporters just before the Nikkei started trading in Tokyo, although he said foreign exchange had not been discussed in Washington. So Nasdaq futures rose 0.6%, pointing to a recovery from Wednesday's 3% ride, while the Euro Stoxx 50 index futures dropped 0.3%, signaling a that side decline in broad European gauge. So the US dollar edged higher against the euro and the yen after the US and Japan trade talks, but was still on course for a fourth straight weekly decline. So outside of that, last major update this morning, stocks dollar drift as US-Japan trade talks in focus. So clearly for the day, the main move of the markets is expected to be the JPY, the US dollar, and of course we'll be seeing some reactions in gold. So I believe at this point, we can jump straight into some technical analysis and try to understand where the markets are headed next. And then once we understand this, then we are able to trade from an informed perspective. So let's get it done. Let's start with gold. So gold formed a new all-time high yesterday with quite a range, right from the open of the market to the close. It was all a bullish curve, up about 3.5% or 1,129 pips. So this morning at market open, we had yet another rally, forming yet a new all-time high. So we moved to 33.58. This is the highest record ever for gold. So this was up about 172 pips before the market changed direction and started moving downwards. And today seems like a negative day for gold, down 2,000 points from open. And of course, from the highest price today, we are currently down about 3,800 points. So clearly, gold is on some form of reversal after the big strong rally over the last 2 weeks. And this is mainly as a result of profit taking. And of course, we don't know what will be happening over the weekend. Of course, we could be seeing some negotiations playing out. So, of course, we are definitely on the bullish side, trying to take advantage of the bullish momentum on gold. But since today has indicated to be clearly a negative day, where gold is giving back some of its gains, then it makes more sense to be looking for short selling positions rather than the proverbial bullish positions where we tend to follow the trend. So today it seems more like gold is reversing, erasing some of the gains. And of course, a pullback would more likely extend all the way back down to around 32.44, which was the previous high, before advancing into new highs. So outside of gold, Brent oil eventually completed our pattern, which was an inverted head and shoulder pattern. So after breaking towards the upper side, of course, there was a pullback and now a bounce, which likely predicts that the market could be headed higher. And of course, the last candlestick before it got into this pattern was around 67.83. So in this case, I expect to see some bullish momentum extending to $67.83 per barrel. So US equities made some pullback yesterday. So yes, they had opened with a gap. So you can all see the gap here. But then the market closed the gap and continued pushing lower. And now today we are testing yet another resistance area, which likely indicates that the US equities are headed much lower. In this case, we will be looking at this area here for potential touch and drop from the current rally since morning. So yes, US equities have been positive this morning, but of course the impact of tariffs is still being felt. So we could be seeing prices dropping from these areas further downwards. So UT 100 also had the same thing. Of course, it didn't manage to close the gap. So the gap started from here. So we could be seeing the market closing the gap to these areas here. And then from here, we'll be looking for more continuation downwards. So it's the same thing for SP 500. So a big gap over the opening of the market on Wednesday. So market managed to close the gap, pull back, and then rallied. And now we will be looking for a potential drop. So in this case, most likely a retest of the trend line and potentially further downwards momentum. So Bitcoin clearly still on a bearish momentum after the highest price that we saw on the 20th of January. So with the bearish momentum, we have seen Bitcoin really struggle to break towards the upper side. So with yesterday being the same thing as we have been seeing for some good time now. And now, if you look at Bitcoin and especially its price action, and then you compare with the last couple of days, I would easily say that this is a market in a sideways kind of momentum. So we chill and wait for a break. So a majority of the 1, 2, 3, 4, 5, I would say the last 5 days, it's mostly some kind of sideways price action. Nothing much is happening here. And of course, we'll be waiting for a break to identify trading opportunities. So as for the major currency pairs, Euro USD seems to have been stuck into some form of consolidation. So more of a sideways momentum for Euro USD. And this is over the course of the last 4 days. I would say for today being the 5th. And now expecting the ECB to cut rates later in the day. This is expected to be weakening for the Euro USD. So clearly a potential drop to this area. But then of most importance, will be a break below this area, which is likely to head even lower to around 1.109. So this could be playing out as soon as this afternoon after the announcement of the interest rate decision by the ECB. So on the pound side, the pound has been pretty strong, pretty clear winner in the currency wars. So given the strong bullish momentum that we have seen over the last couple of days, yesterday was much of a retest of the previous high. And now we are seeing a very nice bounce on this particular trend line, which acted as a major resistance and now turned into a support, which likely leads to the expectation that the pound continues gaining against the dollar, and in this case, extending towards the previous high. So clearly, the previous high is around 1.34221. So in this case, I expect some further bullish momentum towards that area here. And of course, as of this moment, it seems like the most favorable or the most interesting pair to be trading for the day. That's pound USD. So the UK 100 index is still on a sideways momentum after breaking towards the upper side in earlier in the week. So from the 1 hour time frame, you can see there was a break towards the upper side, something that we had discussed, a break above this previous high, and then 2 days of sideways momentum. But the overall expectation is that the stock market index continues with the bullish momentum and eventually hits 8,434. So as for the dollar Swiss franc, also some form of consolidation, more of a sideways momentum. So we'll be watching it closely for a potential break. We don't have a break yet. So it's more of a chart that you want to put under watch. So for USD JPY, clearly we still expect some further bearish momentum. So we've been on sideways momentum, but the highs have only been getting lower for the week, which likely indicates that the market could have hit some form of resistance here, and now it could be headed to another area where the market is now moving further downwards. So given that we are testing the London and New York sessions high, that is as per yesterday, and the market seems to be rejecting that area, then the idea is that the market moves back to the previous bottom. So that will be a key trading idea for the day for USD JPY traders. So AUD also on a sideways kind of momentum. So yes, we managed a new high yesterday, but still I would argue that we are on a sideways momentum. And of course, as of this morning, the market is just bouncing from the lower side, moving towards the upper side of the range. So the Nikkei 225 index is still making some good recovery. And in this case, after retesting this bottom, we could be looking at last week's high, and that is 5,115 yen per share. So clearly some good bullish momentum is playing out since this morning. And with the potential of an eventual trade deal between Japan and the US, then good chances that the Nikkei continues with the recovery journey after the big sell-off that happened about 2 weeks ago. So that being said, now we move on to European equity indices. But before we do that, we also look at New Zealand USD, which is also on some form of sideways momentum, with this being the resistance and then this being the support. And as of this morning, we are looking at a market that is recovering, getting back towards the previous high. So the daily high might be a nice target for the day. So on European equity indices, we have the France 40 stock market index. Of course, we projected that the market would continue with the recovery and eventually get to the previous high. This is the high of last week, but we haven't broken above that area yet. So we'll be watching closely to see if there's a break of this area. However, there was a gap this morning and the market is more likely to close the gap. So chances are that we will be seeing the market closing the gap by moving further back downwards. So it has been a similar story in European equities this morning, opening with a gap. So in this case, notice how there was a big jump in the Spanish stock market index all the way up, and now we are looking at the potential where the market goes back to the opening price. So yes, we are bullish about European equities, but at some point, we expect the markets to be closing the gaps fast. So the same case applies for the Germany stock market index. Of course, there was a very strong bullish momentum at market open, and now we are seeing the reversal. Potentially, the market is headed to the previous low. This is the low that we saw as of yesterday. So clearly, for a market that has been moving sideways, would be more of having the expectation that the market eventually gets back to mean, and in this case, drops from the earlier gains in the morning. So for the EU 50, it's the same story, market that has been on a strong bullish trajectory, trying to retest the previous high as of 5,062 price action level. So as of the last 2 days, we have been unable to form new highs, which indicates some level of weakness. So if you move from, let's say, the high on Tuesday, the high on Wednesday, and now the high on Thursday, they are all getting lower, which implies that the stock market index is most likely headed towards the previous low. But in this case, the lower trend line, which has been acting as support since we got this pullback here. So overall, we expect these indices to recover, but without any news backing it up, then the pullback would be happening as early as today. So that's it for the day. I would like to thank everyone for joining the session. Checking the comment section to see if there's any questions. First question, I do host these episodes on Fridays. I have missed the last 2 Fridays. So we do not host the sessions on Fridays, mainly because of a couple of issues. So I'm currently introducing 2 more guys from our team to be doing these market snapshots. And that is Emmanuel Boto and Prudence from TZ. So with these 2 guys, we'll be able to spread out the sessions through from Monday to Friday. So that will be covered in the near future, perhaps by next month. So good morning, Rono Hirari, Bieni, Whitney, Richard, Emmanuel, Khalid, and of course, Daniel Kingori. Thank you guys for joining. And in the last part of my presentation, I would like to share some stuff. So if you are just a beginner and you haven't had the opportunity to learn how to trade Forex, make sure to check out this course, which is Novice to Pro with Rufus Kamau. That's my name. So you start from the very first episode, which is number 10, Introduction to Forex Trading. Then you go to Charting Skills, Tradable Assets, Know Your Candlesticks, Market Structures, Trading Strategies, Risk Management, Understanding Market News, Building a Trading System, and lastly, Trade Like a Pro. And these will help fast track your journey in learning. So outside of that, I also want to invite you to check out the Bullish Banter podcast, which is hosted by myself and Jesse Ogola and sponsored by FX Pesa. We cover quite a number of topics. So in the last episode, we hosted FX Mwangi, who basically turned a $10 account into a whole trading career. It's not like he built his career on his $10. It's more like the lessons he learned from his very first account with $10. And then he built onto that to make himself a career. So in today's episode, we'll be looking at 0 to funded, Stuart FX free pass incredible trading journey. Hopefully you'll get to enjoy this special feature from Uganda. And then once you cover this, we'll be having more episodes for you guys. So if you don't have a trading account, make sure to check the links in the description below. And if you're watching this on X, make sure to check out the links from the FX Pesa page. The page is fxpesa_official. And once you go through that, hopefully you'll find all the information you need to get yourself started, to register for an account, to learn how to trade, and of course, to attend the daily market snapshot sessions that happen every day from 11 a.m. So that's it for the day. Enjoy the rest of your trading day. Happy Easter holidays.